Good morning. This is Larry Edelson for my Uncommon Wisdom video for Thursday, May 27th. Again this week, a lot of action in the markets. I want to particularly take a look at gold. I have a updated chart here for you on gold. Let me pull it across. Please take a close look at this chart and follow me along. The black lines that you see on this chart are the lines that have basically been there for the past couple of months that I've been tracking gold for you. I've added, however, a cycle count on the bottom, these green arcs that you see here that represent a 40-day trading cycle which I've been tracking. That cycle, as you can see by my notes up here, was due to bottom May 24th. And lo and behold, right there on May 21st, last Friday, we got the bottom, and on Monday of this week, gold started to move right back up, confirming the bottom, the 40-day trading cycle low. And now gold is already roughly about $30 or $40 off its low. This uptrend channel is going to define most of the price action going forward. We should see gold move up at least to its recent record highs at $1,249, and quite possibly on this move higher up to about $1,300 before it falls back again. However, nothing is ever guaranteed. We need to see gold, stay above this rising uptrend line here, the bottom line of this channel. Otherwise, we could go sideways between 1215 and 1180 for the next few weeks or next few months. However, with the cycles pointing higher, not just the 40-day cycle, but other cycles I'm monitoring in gold, I believe that we're headed to $1,300 in here. The reasons, the fundamental reasons will remain the same. The sovereign debt crisis is literally crushing the euro and tearing apart Europe. We also now have very high tensions between North Korea and South Korea, about as close to a second Korean War as we've seen in the last few decades. And that nobody should underestimate. That's something that is very scary, and if not contained, could be a very big problem. But of course, we also have the debt crisis that is eventually, and sooner rather than later, going to hit the United States. Right now, it's manifesting itself in feasting on Europe. It's only a matter of time before it hits the United States. It could hit the United States this month. It may be another 6 months. It's almost impossible to say. However, it will hit the United States, as I've been warning you. The dollar, let's flip over to the dollar now. I'm going to show you the dollar index. Last week, I told you that it would be largely stuck in a trading range here if it did not move above the upper side of this trend channel here, that we'd go into a sideways affair, and that's so far what we're doing. The dollar is just benefiting from the crisis in Europe. The dollar itself is fundamentally very weak. It is still in a major multi-year long-term downtrend, and I strongly believe, I have absolutely no doubt whatsoever, that when the sovereign debt crisis hits the United States, the dollar will be losing its status as a world reserve currency, and by 3 years from now, the entire world will be forced into a new monetary system. That is the only solution. Drastic times require drastic new measures, and the old monetary system is breaking down. That is what we are entering into now, and it is going to last for some time, and it will be some time before it's resolved. So you want to stay long gold here, there's no question about that. But let's now take a look at the Dow. The Dow Industrials. Last couple of weeks I told you get out of all stocks with the exception of gold mining shares and select natural resource stocks. The flash crash back in early May was just a warning. The record highs in gold were flashing warnings about the stock market, and lo and behold, we have seen the Dow plunge down to just below 9,800 before recovering a little bit yesterday. The Dow now is probably a little bit oversold. We will probably see a rally back up to 10.6, but don't kid yourselves. The Dow's major rally from the March '09 low is over. We are going to see a short-term bear market here lasting up to a year. Lots of zigs and zags in it, but we will get down to 9,000, perhaps even 8,700 on the Dow. So you do not want to be an aggressive buyer or holder of stocks here, except for gold mining shares and natural resource stocks. Select tangible assets that can represent real wealth here and be contra-dollar, contra-currency plays. That's it for now. We have a Memorial Day weekend coming up. Half a day trading on Friday, and the markets are closed here in the United States on Monday. Please spend a nice holiday weekend with your family. Till next week, this is Larry.